Hey, welcome back everybody. Here again with another update of my dividend investing account. So if you're new to the channel, what I do is every week or so, I deposit another few $100 and I'm just documenting my journey with investing in dividends in Wealthsimple Trade and documenting everything as well with a Google Sheet that I made myself. So all of the shares that I hold are on the Toronto Stock Exchange. They're all Canadian dividend paying stocks and they're spread out across a few different sectors and many different companies. And if you've been watching these videos before, then definitely welcome back. I'm really happy to have you guys here. If you do like these videos, please make sure to hit that like button. It really helps me out and yeah, gets this video out to other people that might also find the content interesting or beneficial. So let's get started anyways. My stock value now is sitting just under $10,100. Which is nice because I've invested $9,925 of my own money. So I also have $530 in cash. Basically, this means that the total account balance is at about $10,600. So basically, I'm up $700 or a total percent of about just over 7. You can see here with the dividends that I've received in the last about 5 months since I started the account at the beginning of September. The total dividends received is $63, and that's included in this total that's reporting here of $706. But yeah, you can see January was the best month so far. Hopefully February is good as well. We'll see. The month's not over yet. But yeah, I'm looking at an estimated annual dividend income of over $400 as well from all of the shares combined. And the average yield you can see here is 4.13%. I like to keep it kind of high, but I started out super high, but I've been buying a few more low dividend kind of growth opportunities, and it's kind of a mixture now on my holdings for what I have. So let's jump into the portfolio tab here and just take a quick look at everything. I have the stocks organized in chronological order right now based on when I added these positions to my account. So it's no particular order for anyone else, but for me it's helpful. And you can see here I have a little bit of information about the percent of my holdings and the unrealized gain, loss, and all those sorts of things. So when I first come in here looking for opportunities in my own portfolio to buy, I always check what's red, and I see Waste Connections is down quite far, Amera, and what else? Metro's down a little bit. Same with Lobla. The rest is all in the green, which is really nice to see, but I do try to buy the stocks when they're in the red, just so I can reduce my average buy price. But something that I'm also trying to do is balance out the account a little bit more because it's not super even at the moment, my percent of holdings. So if we actually just set up a filter here and organize this so we have the biggest positions first, and then going down, you can see some of my bigger positions are all of the ones that are in the red, and that's because I've been buying into them more as their prices have been decreasing. But it also means that down here, a lot of my positions, I do have 33 different positions, but some of them make up even less than 1% of my portfolio. Now, I do want to be adding to some of these today, but I'm also cautious not to add to ones that are up crazy high. Like right now, I wouldn't add more to TFI International personally because I'm already up so high. I would just kill, that gain if I bought another one at that price. So for me, there's much better options. But to get started, I did want to pick up just a couple of these red ones while I'm at it. I'm looking at Amera here. This is too good to turn up for me. And I think I'm just going to buy one share. That's all. I just want to grab something, just a little bit of an opportunity here while it's down quite far. And I want to do the same with Metro here as well. Down almost 3%. And it has a lot of growth potential that I'd like to also add into my position. I'm also looking up here at Fortis. It's not quite in the red today, but this is just a really good position. It is the biggest percentage of my holdings, but I think I'm going to be adding in just one more today before this creeps up anymore. And then for the rest of the purchases that I plan on doing today, just in a second in this video, I want to get some stuff that's more in the bottom half of my account. And I was looking through here, and a lot of these ones, the reason I haven't been buying them is because I've already experienced such a huge recovery in these. But I was trying to figure out what would be a good opportunity for me personally, and one that caught my eye was Great-West Life. I'm only up 10% on these compared to 20, 30, 40 in some of the other positions, and I've been checking out them. We'll actually take a look at them in the Sparkline in a second. Actually, you know what, we can just jump in right now. If we look here at Great-West Life, they should be down here. This is the lifetime view. It doesn't actually, the way the Sparkline works is it doesn't show you the actual duration, but you can see here was basically March when everything crashed. It's recovering a little bit since then, but also if you just zoom in a little bit, even on the last 5 years, they have been a little bit on the decline. But basically, I just want to buy this one. It has a very strong yield of 5.81% at the moment, and I'm just going to grab these and hold them for the very long term, enjoy the dividend while it lasts, and then maybe one day later when the price is higher, at some point, then I'll think about selling them. Now, I also did want to pick up TELUS because if we go back to the portfolio tab, taking a look at TELUS, they are up 16, almost 17% compared to my average buy price. But again, compared to some of these other ones, it's okay. But also when we look at the spark line here, we can also pull it up for TELUS, which is right here. In the last 5 years, we can see pretty nice growth. And then also looking here, if we just set it to the max that's available, again, this growth is just nice and like very healthy. You can check it out in Yahoo Finance as well. I've got a link here that jumps straight to it if we want, but basically we can just stay in Google for now. But I'll be buying TELUS for like the strong dividend yield of 4.5% and also this strong history of growth potential. They have solid dividend growth. I think they grow their dividend. I was just looking on their website. Something like 7 to 10% per year is their target. And the dividend growth plus, yeah, just a strong history of the stock price appreciating as well. So I wish I bought them a little bit sooner, bought more, but I've been doing other things. And so today I think is still a good choice for me personally to buy into TELUS some more. And then I think the other one I was looking at here as well, I'm just trying to spread out the holdings a little bit and not put everything into too many companies or too much into one company at a time. But I also was looking at Algonquin Power up here. It's up 9%. Again, it's quite a lot for just a few months compared to my average buy price. But when we check the spark line as well, which is right here, when we take a look at the max, again, we just have very, very strong growth here. And this is a little bit deceiving because this one hasn't been on the stock market for as long as some of the other ones. But again, you can see this dip here in March to get a little bit of an alignment, or we can even just check the last 5 years here. And we can see, again, this very strong tendency of growth. These guys also have solid dividend growth and a nice dividend yield of 3.63%. So yeah, let's actually jump into Wealthsimple Trade now, which is the broker that I use to buy and sell the stocks. Honestly, I really like this broker. If you're in Canada, it's an awesome choice because if you're buying stocks in the Toronto Stock Exchange and especially buying them in your tax-free savings account, you don't pay any fees on the buy or the sell of the stock, and then you don't pay any taxes in the account. No taxes on the capital gains or on the dividends that are paid, as long as everything is in Canadian dollars. Do watch out if you're holding American stocks or foreign stocks because you're going to pay an exchange rate and some of those dividends might actually be subject to withholding tax. But basically what I'm doing is I'm building this whole entire portfolio in my tax-free savings account with Canadian stocks, and it's working really well. You'll see in this video that I'm often just buying one stock at a time, and if I was paying like $5 or $10 per trade and buying a $50 stock, paying 10% just to buy it, not even to sell it, with some other trading apps, this strategy wouldn't work at all. So that's something that I really like about it. And if you want to try it out, there's a link in the description below. You can click that link and you'll also get basically $10 deposited into your account by Wealthsimple Trade after you trade your first 100. And I'll get a little bit of money too, so that's just a really nice way that we can each help each other out. And if you've already installed Wealthsimple Trade but you haven't redeemed the code yet, the code is also in the description below. And if you look on mobile, you can just click this little gift icon at the top of the screen and copy and paste that code in to redeem it after the fact as well. So that's a nice feature too. And even on top of that, what you can do is you can invite more friends to Wealthsimple Trade and then invite them with your code. You can also hook your friends up with some free money and they can also benefit you when they sign up too. So yeah, Wealthsimple Trade, awesome product all around. Highly recommend using it. But anyways, that's enough. Let's get into the actual purchasing. So what I want to do, let's start off with Algonquin Power. It's AQN, and we can select these. Again, we can check through, you can skim through the charts if you want as well. They're just going straight up, and that's fine with me. So today I want to pick up 5 shares. So let's set this to 5, and I'm just going to go with a market buy. I'm okay with that. So it's about 22.32. That's cool with me. And we're going to place that order. Okay, cool. So the next one that I wanted to pick up was TELUS. It's just TELUS like this. T on the TSX. These guys, again, you can just jump to this 5 year or we can check out the 1 year chart. It's the same as what we're showing in the Google Sheet. TELUS, I also want to pick up 5 shares today. So that's going to be a market buy as well. I'm okay with the market buy. And we're going to go place the order for around $136. The next one that I wanted to pick up was Great-West Life, which is GWO, and pick these guys up. What I wanted to do is grab 4 of these. So they're around $30, so that should be about a total of $120 that I'm just going to do a market buy. I also don't mind doing market buys, especially because I'm only like, if if it jumps up by 1% or something, or if it swings by 1%, if I only buy, in this case, $100 in it, and my price changes by $1, of course it's a little bit annoying, but it's not like going to destroy me. It's not like I'm doing transactions of $100,000 or something. So I can be a little bit more laid back about using market buys and not worrying with doing limit buys or things like that. But yeah, let's also pick up the one share of Fortis that I was looking for. So I'll just take one of these. I just want to check their daily price. Yeah, that's fine. So I'm just going to go through with Fortis for a single order with a market buy. And then also wanted to pick up MRU. This is Metro. And I think I just wanted to take one of these today, again at a market buy. And that's going to leave just enough for one final share in Amera. These guys are down quite far from my average buy. And yeah, they're even decreasing a little bit today, so I'm just going to pick up one, and that should clean out my account after I buy that. Okay, cool. So I've got $5 left to spend. Can't afford anything else, so what I'm going to do is jump back into the Google Sheet and log these in the Transactions tab. So every time I buy a stock or sell a stock, I come in here and I drop them in. Especially when I'm doing market buys, I always double check in Wealthsimple Trade in the Notifications tab to make sure the actual price that I paid might have varied a little bit from what it displayed in Wealthsimple. And you'll notice I was only typing in the blue cells, and I do that even with the name of the company just to make sure I don't have a typo. Like if I accidentally typed in, I don't know, something else, like I put a TD here or something, and I was expecting it to be TELUS, it's just a good check for me to make sure that I'm actually inputting everything incorrectly to reduce my chance of making mistakes in this sheet. But between that and also checking, like, comparing the balances after, before the market's open, and that the cash in my account displays the same in this Google Sheet as it does in my broker, I have a pretty good confidence that I'm actually doing things correctly here. But yeah, let's jump into the summary page and just check what's going on here. So the first thing to do is check out the estimated annual dividend income. This is always the most exciting part. So at the beginning of the video, it was about $417, and now we're at $440. So just based on the transactions I did right now, my annual income has gone up by $23. That's going to be every year, pretty much at least, unless these companies start cutting their dividends, which doesn't happen that often. Of course, it happened with Ryokan lately because of what happened, everything that went on earlier this year. But like companies like TELUS, for example, they strive to increase their dividend by 7 to 10% every year. So even if I didn't buy more stocks and add more into this account, then chances are this number is going to creep up at a rate, something like that every single year, just by itself without me doing anything, which is really nice to see. If you do notice too, the cash here says 816, but when I was in Wealthsimple Trade, it said 5. So let's just switch back for 1 second, and so here we're in the screen again, and you can actually see it's changed to 816. So what happens is it withholds 5% when you're doing the purchases, just in case like the price wildly swings after you put in the order. But while I was typing everything in, it settled down, and it's actually $8.16, which is what we have in the sheet. So that's always really nice to confirm that I even typed in all of the purchases correctly. Otherwise, these numbers wouldn't match. So yeah, guys, I think that wraps up this video. If you like this Google Sheet, you can also get a copy of it. There's a link in the description as well, with instructions on how you can get it. I tried to make it as clean as possible and nice to use. Like everything is as automatic as possible. And there's a whole bunch of formulas here, just like doing stuff behind the scenes. So if you do like it, consider giving it a shot. If you're into Wealthsimple Trade, also, yeah, consider trying out the link, getting your $10 and seeing if you like it or not. And then otherwise, guys, yeah, if you're still here, please hit that thumbs up button. It really helps me out. And thank you so much for watching all the way to the end. And I will see you guys in the next video.